Hello, and welcome to the latest instalment of the Market Financial Solutions Let's Talk Property podcast. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. Market Financial Solutions are a bridging loan and buy-to-let mortgage provider and are not legal, financial, investment, or tax advisors. This content is for informational purposes only and does not and should not be considered to constitute legal, financial, investment, or tax advice, or be relied upon by any person to make legal, financial, investment, or tax decisions. Therefore, investors are encouraged to seek appropriate professional advice. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of Market Financial Solutions. Now, let's get started.
Hi, and welcome to the last episode of the year of the Let's Talk Property podcast. I'm here today with Omkar, our Deputy Chief Mortgage and Operations Officer at Market Financial Solutions, and we're here to do a bit of a roundup of everything that's gone on this year, from the market to everything we've been doing as a business as well. So, first of all, let's start with a bit of reflection. So, when you think back over the past year, what stands out most to you in the specialist lending space?
Morning. Is the resilience and adaptability. It does seem like no matter what happens in the wider macro environment, specialist lending always comes up with ways to not just survive, but thrive. Let's take bridging, for example. What we've seen at MFS is bridging is no longer bridge the gap kind of product. It's no longer a gap filler. It has creeped into as mainstream financing product of choice. What we've seen is property investors have actually started to include the financing cost into the ROI model to make the sound property investments. So it's really interesting how bridging has crept into mainstream financing as such. Property investors are expanding the portfolios. They're no longer looking at just residential properties. They're looking at higher yield properties as such. So
seeking that yield.
It's a massive change in customer behavior as such that's we're looking into. But the main thing is, no matter what happens, the lending industry finds itself to move along with it.
Yeah, absolutely. I think one thing that I've seen definitely is that where it was seeing specialist lending as a last resort or something that had to be taken really quickly to get something over the line that had potentially gone wrong, people are using it to realise opportunities instead.
Absolutely.
The mindset shift has been incredible.
Absolutely.
Over what appears to be quite a short amount of time. I mean, obviously, working in specialist lending, you sort of understand that. We've understood that for a long time. We want people to start building this into their models so that, you know, when it works for them. But seeing clients and brokers realizing how it can be used has been really good, I think. So.
Absolutely. It's no longer just high street banks that people turn to for lending opportunities. They look at brokers, they look at specialist lending to see what kind of options are there. So it's really interesting shift.
Yeah, and it allows us to, allows them to not be locked into something that potentially doesn't work for them long term. And yeah, it's great. It's really good. So from your perspective inside the business, so obviously this isn't something that we talk about particularly often outside the business, but what are some of the biggest challenges and shifts that we have faced this year, would you say?
I wouldn't say challenge necessarily, but in terms of customer behavior change, what we've realized is they're no longer interest driven. What they're looking for is the speed, service, certainty. So one of the challenges at MFS has been to make sure that we carry on with the due diligence that we need to make sure we're making responsible decisions, but make those quickly, make those efficiently, make the customer journey more efficient and transparent. That's one of the key things that we worked on in the last 12 months' time. The other thing, which is not peculiar to MFS, is industry as such, is just the political economic backdrop, just to see what trends are happening in the wider market, and then try and adapt our products accordingly.
Okay. And on that kind of trends and shifts, so you mentioned earlier that people are utilising they are looking to expand portfolios into different kind of assets. That's a trend, presumably, that we will continue to see.
Absolutely.
And brokers are seeing the same things from their clients. So are we seeing a shift in what we're getting from direct clients versus brokers, or are we seeing the same sort of...
We're seeing the same thing, but what's happening is investors are looking at assets which have optionality. They're looking at assets which can add value to it. They're looking at assets which are more high yielding as such. So it's no longer residential flats. They're looking at MUFBs, they're looking at HMOs, they're looking at PBSAs. Residential landlords are no longer scared to venture into mixed use properties or commercial properties. So that's the trend that we've seen.
Yeah.
And of course, to accommodate that, we've altered our products accordingly as well. So when we launched buy-to-let products, for example, it was purely residential. but because of this shift of demands, if you will, we've expanded our products to commercials. It was commercial with just mixed use to start off with, but as we've learned and matured, we've expanded that to essentially all kind of commercial units. It's not just retails. We look at light industrial warehouse, office spaces, restaurants and pubs, etc. So expanding that product offering to wider asset, that has really been helpful, and we had to do that because that's the kind of cases that we're looking at,
Yeah,
or receiving rather.
well, interestingly, we were going to talk about innovation next, really, and that innovation's been a big focus for us this year. But what does it mean to you in the context of specialist lending? Where have we made the biggest strides as a lender?
Yeah, I mean, innovations can mean different things to different people, right? It could be about IT, it could be process, it could be products, it could be looking at funding structures to extract the best pricing for the customers. At MFS, we focus mainly on product innovation. The two main things that stands out for me, let's talk about bridging first. We expanded into bridging fusion effectively, right? I love bridging fusion. It's essentially hybrid between your bridging loan, but long-term lending. So it's giving you the flexibility of bridging criteria. It allows the investors to have time to stabilize the asset, to execute the change of use, whatever that might be, to make it more stable for them. But it gives you certainty of long term, 24 months with the optionality of extending to further 12 months time.
Yeah.
So it gives that breathing space to the borrowers or investors rather to execute the plan that they have with that particular asset.
Yeah.
It's a great product for dev exit, for example, with the slow liquidity in the market. It's a great product for someone who wants to acquire the property to change of use, add some more value to the property, or it could be simply extracting equity from a nicely income generating property in the first place.
Yeah.
So that flexibility of criteria, along with the certainty of longer term, I think that's a
It's
great
working
mix.
really well. I've heard some really good things. I mean, obviously, I would say this. I'm also part of Market Financial Solutions, but some really good stuff from brokers on Fusion and those places where it works, because you can roll and defer on Fusion as well, right?
We can. So it's part service, part rolled ups. Along with you can roll up from 3 months to 9 months. So it gives the borrower added flexibility. If they choose to retain upfront, it just gives them more time to manage the cash flow better, allow them to execute the plan, whatever they have in mind. So that's really important. I think that's the point of specialist lending. It's giving them the flexibility. It's giving them the optionality to do what they want.
to make it work.
They're not hamstrung by what mainstream banks really want their products to do. It's the wider range of array that really is driving factor for bridging fusion success.
Yeah, amazing. So, I mean, apart from Fusion then, we've made a whole range of updates and enhancements on some of the products. So which one do you think had the biggest impact?
There are quite a few really, but if I have to pick one, it's the wider adoption of title indemnity across the product. So we use it for not just buy-to-let, we also use it for bridging, not just for refinance, also for purchases. So that's really had a big impact on the cases that we're seeing in the turnaround time. It's not only reduces the legal due diligence process as such, but it also reduces the cost that borrowers normally have to cough up.
Yeah.
So it's a really good thing to use for our type of lending. The other thing that we've also seen that has got a massive impact is positioning our semi-commercial products separate to commercial products. So what that has allowed us is to gain the pricing competitive advantage over commercial thing, because we can now price mixed used assets slightly cheaper. It also expands our distribution channel as well, because not networks can do commercial loans, but now that you start putting them into residential or mixed use category, they can suddenly start servicing those kind of business as well. So we've realized that sometimes you have to only make small tweaks and enhancement. We don't need to reinvent the wheels.
Yeah.
When it comes to products, less is more effectively. Doing what we do even better has massive impact than actually coming up with a whole new product.
Something
if that makes
brand
sense.
new. Yeah, no, absolutely. Okay. And then the market itself, so wider economic factors. So this year there's been some, talk, interest rates have come down, affordability's been a big sort of chat in our sector as well. How do you think that's kind of shaped the specialist lending arena this year? Do you think it's made massive changes to what we're doing?
It hasn't made massive changes, but as I said earlier, it's staying nimble and flexible. What is done is customers are now used to having slightly higher interest rate. We no longer are seeing brokers and customers haggling about interest rate, which they were doing 18 months ago. They're now accustomed to higher interest rate. But what that has changed is they're now more demanding. They're looking at things like service proposition. They're looking at certainty of it. They're looking at customer journey a lot more. So what's that driven is not allowed, essentially made lenders look at the processes and the service in how they do things, how they look at things, even with more finer tooth comb, effectively. I did that. In terms of customer behavior change, they're now looking at assets which are more high yielding. There has been a stark investment strategy shift. They're no longer looking at asset which will give them asset appreciation in short-term time. They're looking at assets where it's a higher yield so that they can retain for longer term. So the amount of flip transactions have gone down, but the amount of transactions that they're acquiring to value add and retain has gone up.
Yeah.
And this is partly because of the slow liquidity in the market. The sales are taking longer. Because sales are taking longer, the demand for development exits bridge for loans have gone up as well.
Yeah.
And as the development exit bridge loan demand have gone up, as they've realized it's taking longer to sell the properties, developers are now realizing, you know what, let's just retain it.
Yeah.
What that has allowed us is boosted demand in the buy-to-let proposition as well. So there's a whole lot of mix that's happening there. It's almost like knock-on effect. But the stark investment strategy has been not looking at direct short-term flips, but retain the assets for longer term. Look at assets that giving them additional optionality. Look at assets that there are more than one usage. We are seeing lots of customers who are buying a bigger house with an intention of splitting into 4 units. And just to extract equity, to extract value from the property. That's the biggest change in the customer behavior.
Do you know, it's really fun. It's really interesting to look at what people are doing and how, you know, people are naturally in our industry and across other industries, idea makers, right? They're looking for opportunity and it's really interesting to see those shifts as people go, right, okay, I have to do something different. I have to find something else. I need to change something up, and this has happened, and therefore I'm going to do this. Like, seeing people problem solve in real time, I think has become actually quite normal for our industry over the last couple of years, since, you know, maybe Liz Truss and maybe even since COVID. The problem solving at a quick pace is really interesting, and it's interesting how it comes into our pots of product.
100%. And it's not just the lenders who are the drivers of this thing.
No.
Lenders effectively are following the market trend, or lenders, not market trend, but customer demands, really. And that's the beauty of it. Customers themselves are looking at different ways. And as lenders, we're following those trends and making sure the products and services are available of what they're looking at.
Yeah, absolutely.
And that flexible nature of the specialist lending is really, really key.
Yeah, no, absolutely. Okay, so moving on slightly. Technology and data. So lots of people talking about AI. I think I go to, you know, every conference I go to at the moment, it's got an AI chat in it. You know, the main thing being AI won't replace the broker and all those kinds of things. However, technology and data in general playing a massive role in lending, right? And a growing role. So how are we using those tools to make us better for our clients?
Yeah. It's a continuous change. I mean, look, there's no hiding away from the fact that the technology adoption has to be done. AI, ChatGPT, as Johnson said, it's here to stay. But also agree with you. Our industry is based on the relationship. It's based on the human touch and personal touch. It's based on manual underwriting. And I don't think that's going to go away. However, it's really, really important for us as an industry to adopt technology and possible AI, if I dare say so. But we can use technology to minimize the processing time. We can use technology to improve efficiency in how we process things. It doesn't have to make decisions for us.
Yeah.
But it can process things so that we humans who are responsible for making decisions can make those more quickly as well as efficiently.
Yeah.
And it would be interesting to see how industry adopts for it. At MFS, I mean, we are lucky to have a change management team who are constantly introducing, you know, new tools every now and then. So instead of we doing a drastic change, we believe in making incremental small changes as such to see what effect it has. But you're right. As an industry, we have to adopt technology.
Yeah.
If we don't, we're going to be what Nokia was 20 years ago in the mobile industry. We have to adopt, we have to improve, we have to progress the way the world is going.
Yeah, absolutely. And I think it is interesting, based on what we've just talked about in terms of, borrower demand shifting so quickly, changes in real time, having to make sure that we have the products ready. Our industry can't be locked in with specific technology that pushes you through a set process, right? The tick box lending, as we've spoken about forever, is not a thing.
If we do that, then what's the difference between us and mainstream lenders?
Exactly,
That has to be our differentiator in how quickly we can adapt, how quickly we can pivot from our current strategy. That has to be the key for specialist lending.
Yeah. And as you said, just making sure that the technology is there to support us where needed, but we're ultimately not removing any of the good stuff from our...
We got to learn how to use it for our advantage.
Yeah.
Then think about it, oh my God, what's going to happen with us? Absolutely not. Yeah. So as I said, I don't think tech will ever take away decision-making power from us. I mean, we are based on relationships, we are based on different partnerships, but it will allow us to process things quicker.
Yeah.
And as we spoke on earlier, now customers are looking for speed, they're looking for clarity of requirement, they're looking for customer experience. So we can use technology to help us in those avenues, whereas individuals can
still make those decisions.
Still make those decisions using that particular platform or data that comes out from there.
Okay, interesting. And obviously that kind of has to then lean on having the right people in the job to make those decisions, right? Which leads us really nicely into my next question, which is around kind of next generation of specialist lending, people coming into the market, into the specialist lending market and looking for roles. So how do you think our sector is going to attract the next generation of talent? And the reason I'm asking this is because we've done a study recently that shows that people don't want to work in finance, not specialist lending specifically, but in the wider finance market. And, it doesn't have a great rep. So how do you think we attract people to our little niche?
Interesting question. I wish I had answers for that. But the reality is we always going to have demand. Our industry is growing year on year. In terms of younger talent, I mean, things like at each industry awards that we go to, most of them now have Rising Star Awards, for example. So that's a massive pull for younger generation. It's not just a pull, but it's acknowledgement of their contribution towards the industry. So that's really, really helpful. In terms of attracting those talents, what we've seen is at MFS, we've been inviting people for summer internships, for example. People who are in their summer break in university, they're joining us for 1 month internship, 2 months internship. And we actually have one example of student who will pass out joining us as full-time employment after the internship. So that's really, really helpful.
Yeah.
There are lenders out there now who've started formal internship program or apprenticeship program as such. So they're looking at school leavers to join as apprenticeship, train them from start or start them young effectively to join the industry. We need next pool of talent to come and join us. Even I've been here for 15 years as such in the industry, but I have colleagues whose first main job in the industry, whose first full-time job is within the industry. So yes, we need to do a lot more than what we're currently doing, but I don't think that people are avoiding finance sector as such. As the specialist lending is maturing and developing, as we get more and more sophisticated, there are different roles that comes within the lenders. A lender is no longer limited to a traditional BDM or underwriter. We have marketeers, we have data analysts, we have CFAs who will work with funding lines for extracting the best pricing models. We have solicitors, we have compliance, we have financial crime prevention. So as the lenders get more matured, there would be more and more roles within the industry. So even though they are within the finance sector, there would be specialized role within their particular remit as such. So I think that's really, really important. We also spoke about technology as well. So as the lenders start adopting technology more and more, we're going to have more data wizards. We're going to have more IT developers coming and joining the lenders. So the financial industry itself is expanding its wings, if you will. The roles are no longer limited to just numbers, but there are other remits of the job that you can do that ultimately contributes to this financing industry. I think that's really, really important. And I think as a lender, we should focus on those jobs as well, because that attracts talent from different areas of life, and that adds value to it. Like this marketing podcast, for example. You don't know anything about numbers, I'm assuming. At least you don't work in numbers as such, but the value that this adds to a financial sector, not just as us as MFS, but also as a wider lending industry as such. That's really important to acknowledge.
Yeah, for sure. And you've been doing some talks at some universities as well, right?
Yes, I did.
Let's
Yeah.
do some talk.
That was interesting. So it was University of Westminster. It was conversation, or it was a guest lecturer for students who were pursuing MSc in real estate finance. So one of the module that they were looking at was financing involved in the real estate. So I had the pleasure of going and speaking to those students for about 1 hour, giving them insights of specialist lending and how they can use our industry. Again, we spoke about the ROI model that property investors are using.
Yeah.
So this future generation who are, pursuing the master's degree in real estate. So it was quite good for them to expand the knowledge and horizon of the industry. And after speaking to them after the lectures as well, many of them were not aware of it, right? They were, when even in the curriculum, they were limited to products like mainstream lending as such, or family offices. But we, as somewhere in between, they weren't aware of it. So as a lender, as MFS, we're doing great things in not just attending different industry awards, industry events, but breaking the barriers.
Yeah.
You mentioned last week in our meeting, we've done over 600 hours of CPD training. Those kind of stuff is really, really helpful to make sure the industry keeps on expanding its horizon and keeps on spreading the word of it.
Yeah, it's about breaking down barriers, right, and helping people understand. I think I've spoken about it a lot over the last couple of years as part of the reason that we launched our CPD, is that you sort of, everybody says it, oh, I sort of fell into specialist lending, oh, I sort of accidentally got a job in specialist lending, oh, I sort of accidentally. And what's really interesting is, if you fall into specialist lending, you figure it out really quick, whether you're in marketing, whether you're in underwriting, whether you're in, whatever you're doing. But if you want to actively join and you're looking around at what you can do to make that happen, then it gets really hard. Whereas then, having people adopting things like the specialist property certification, run by LIBF, some of our CPD lenders are doing, great things in educating the next generation. That's where I think we need to break down those barriers so that people understand what it is that they're getting into, or at least if they want to get into it, they know how to, as opposed to just sort of banging on some doors and trying to figure it out.
Absolutely. And I'm actually quite proud of MFS that we are one of the pioneers of doing that. So it's great to see. It's great to see.
Yeah. Okay, fine. So pivoting away from that a little bit, looking to next year. So what excites you most about where the market's heading? So trends, innovations, opportunities?
First and foremost, I'm looking for some kind of stability, which we have seen in H2 of this particular year. But where I see the market going is continuing the current trend where people are looking at high yielding properties. So demand for MUFBs, demand for PBSAs, demand for mixed use units are going to go on the rise. I also think people are going to look at commercial assets even more. That is something that we are looking at MFS. I mean, as you know, we recently launched our CRA team about 6 months ago. That is purely to focus on that market because we see the trend going that way. So we want to make sure that we are one of the first ones to capitalize on that. The other prediction that I probably have is this is going to become more and more mainstream. The specialist lending is going to become product of choice. The brokers are looking at us as a primary option and then going to long street or high street lenders as such. And that's here to say. For us to make sure we go on with the trend, we got to make sure that our service proposition, our processes, they are more streamlined. As the borrowers become more demanding, as they become more customer journey aware, we got to make sure that we keep on that trend.
Yeah, and stay on top of it. Amazing. Okay, well, thank you so much for coming in and speaking to us.
Pleasure.
I think we're all done. So if anybody wants to go and find out more about what you do and to connect with you, where can they find you?
Get in touch. 9 Barclay Street is where I live most of the time. But I'll provide my name, email address, and phone number over here. Get in touch. We'll be more than happy to have a chat with you and see how we can work together.
If you enjoyed this episode, don't forget to subscribe, rate, and share it. You can access our previous episodes in all of the usual places, as well as on our website at www.mfsuk.com/podcast. You can also stay connected with us on Instagram at mfs_LTP. See you next time.